Hello fellow traders, you're welcome once again to my channel. Today I want to quickly show you guys some things you've been seeing in other videos, but probably you don't understand it properly or it was not properly explained. You struggle with where you think the pullback is going to end. That is, once the pullback starts, you can't figure out possible areas the pullback is going to end. What I want to show you today is those areas your pullback is expected to end and reverse. Let's go along with it. This is the expansion phase for this. Yes, this is the expansion. So for this move, what you're looking for is, you see, every candle movement, the candles like shaking hands. They like shaking hands. Like one is traveling to come back and tell the other one, the other one will bid it farewell, safe journey, something like that. So the candles too do the same thing. So they come back, they touch either the wick of the previous one or they touch the body of the previous one. A sort of handshake thing. So let me just show you what I mean. Look at from this. That is what I mean is red candles will always touch red candles. That is, they will go back to touch the red candles. Black candles will go back to touch the black candles. That is, but anywhere you see that they fail to touch each other, that is where they create a form of gap. In other forex strategies, they call it fair value gap. I'm too lazy to go and find out what fair value means. So maybe I'll just get it like the box. That's what I would just call it. They leave some form of, a form of box that they come back to. So most times those boxes they left behind when they are going, it is that same box the pullback comes for to come and fill. That is something like this. Now, if you look at it, this is a red candle. You can see that this second red candle touches this one. This third one touches this red. And you see the next red candle, look at where it is. It failed to touch this red candle. Let me zoom in so you can see what I'm saying properly. This first red candle touched, that is this second red candle touched this first one. If you look at the body, the wick, it actually touched each other. This third one touched this one. Look at the next one. The next red candle did not touch this one. That is a gap. So what you do is you put a box there. You make sure the box touches the body of the two candles, and you expand it a bit. Inside this box now, the two candles did not touch. This one and this one did not touch. So you start looking again. From this candle, from this red candle now to this candle, was there a touch? Let's look at it. Let's. At times you have to zoom in properly to actually check. From this one to this, is there a space? There's a space there. You put a small box there. That is how you'll be looking at it. You'll be looking for those boxes. Those are the possible areas price can come back to. Look at this one. Let's make use of this. Look at this one now. This one and this one. This one and this. There's a touch there. This one, let me remove this. This and this wick, there's a touch. This one, this candle did not touch this one, but it came back for it. So there's a touch there. So you leave it. This candle did not touch this one. Okay, if you look at it now, there's no touch there. You put a box there. Please make sure the box touches the body of the two candles. Not just the wick, the body of the two candles. You see? What you are looking at is the candles at the extreme, not the entire candles on the line. The last candle here, you can see there's a candle here. If you look at this, it touches this, but that's not the candle we are looking for. This candle touches this. That's not what we're looking for. It is the candle at the extreme. So this candle failed to touch either of these ones. So there's a box there. Now let's look at this one. This candle failed to touch any of this. This candle did not touch any of this. So you put a box there. You see? Look at the wick. Failed to touch this one. So you put a box there. You make sure it touches the body of the two candles. You see? I think we are done there. So this touched this. This one touched this. This touched this. So I think we are done there. So let's zoom out again. So these areas, please, if you don't get what I just did, please watch the video again. These areas that the candles, when you are selling, it is the buy candles that you expect to touch each other. The opposing candles. If you are buying, it is the sell candles you expect. If you are buying, the sell candles are the one you will monitor if they have that handshake. If you are selling, it is the buy candle you check if they have that contact. Opposite candles, that if you get it. So please watch the video again if you don't understand. So all these boxes left behind, it is what I would refer to in my own strategy as the fair value gap. Though the fair value gap in the other fair value gaps they mentioned is quite different to this. But I came across something. So during the course of trying to look at that thing, I discovered this is actually the real fair value gap, not what those people have been teaching all the while. That is why people find it difficult to actually trade those fair value gaps. This is the real fair value gap. Every box you are able to track. That is the fair value gap. So now, since this is the extension, let me put something here. So yeah, let me put something here. Let's zoom out a bit. Let's tag this as yes. Let's just use this. Let's just say this is an extension. For example, let's say this is an extension or an expansion, so to say. So you know the normal way. So if you're not trying to figure out where your pullback is coming to, the pullback is coming to either of this. So the best way to avoid all those unnecessary entries, you use your Fibonacci tool and you stretch it the normal way you're supposed to stretch it from the highest to the lowest point and look for those. So now you have it, and according to Fibonacci retracement tool rules or laws or whatever it is you call it, for me personally, I like avoiding anything below 50%. And most times I don't really trade the 50% level. I always trade either anything above 50, maybe 60, 618 and the rest. So above 50, this and this box and this box are the two boxes there. So that means I'll delete this. Now we are in the strategy phase. So I'll delete the other ones I've deleted. So I'm only interested in the boxes I've been able to track above the 50% Fibonacci line. So if you now extend this box, the first one, If you now extend this box, the small box, the first one, the box is supposed to touch the body of that candle. Yes. So yes, this is it. Okay, let's zoom out. What you do is you put a line there. That's the first box. Then you check, then there's something else you do to accurately get the proper position where the price is definitely going to reverse. You use our trend line. That is why I'm saying I have a video for the particular way I draw my trend lines. Please make sure you watch that video. That video is going to change your life. Look at it. This is the trend line from the beginning of, that's the highest point. That is my trend line, my method of drawing my trend lines. You can watch the video. For the sake of time, I'm able to start explaining why the trend line is like this. So for the correction we used to do on the trend line, we correct to the lowest, we correct to the highest. So you can remove this. So you continue like that. So as the last pullback, yes, the last pullback before the break of this trend line. The last pullback before the break of this trend line, it is that spot. The last pullback at the break of this. Because if you check this now, let's check, because for clarity's sake, for this to somewhere around here, there's no other pullback. This pullback was out after this line. Let's remove this fibs. No, let's remove the Fibonacci so it won't get us confused. Fibonacci, let's remove that Fibonacci too. So we are using this for an example. We are pretending as if it is the expansion phase, and this is supposed to be the pullback. I'm just using this for illustration purpose, just to teach you that particular thing. I'll show you examples. So assuming this is where the expansion here, the pullback finished, and there's an expansion here. So now you put this. So the last pullback from the beginning to the end of this place is where you look for, and that pullback, the box inside this, between here and here, the box inside that place is the accurate one. That is where price will reverse to. So you can as well, you can leave this or you can delete it, but for now let's remove it. So now price will do what? We are waiting for a pullback. Let's, like I always tell you, let's pretend as if all this has not happened yet. Price only got here or somewhere here. So we want to figure out price is going to pull back. Where is it pulling back to? So remember, you map out your boxes. Then you use your trend line to look for the last pullback from this top to this bottom here to after this line. You look for the last pullback before the break of that. If the pullback is here, the box you have here is going to be the box that price will reverse to. I'll show you later, but let's look at what happened. So now that we know this is where we are aiming for, price is definitely coming here, we can remove these ones. So we leave just this one. This is the pullback before the break of this. So, and we've marked it. So we just wait and let's check where price reversed. Look at it. Look at what price did. if you can recap, you can remember everything I've said so far now. If you practice that, and you first thing I have to tell you first, every strategy you come across on my page, on my channel, please endeavor to do a back test. Don't just take my word for it. Do numerous back tests. Try to test, see if what I'm saying makes sense. If you've tested it and you're convinced this strategy is good enough for you, or you're able to tweak it one way or the other to your own taste, and it gives you that very, very lovely result you've dreamt of or you desire, that is when you put my strategies to use. Don't just jump on it because lazy say so, or because I've shown you it works from my videos. Put it to test. Do a back test of the strategy. See how often it brings it yields profit. So from this example now, look at what happened. That very spot. Let me remove these trend lines. Let me just remove one so I can map it out first. Look at it. From the highest point here to the break of this line, that's from your expansion on your expansion phase, the highest spot price got to the break of the to the break of structure. Yes, this is our pretend break of structure for what we are trying to do. So you mark the highest, that's the last pullback before the break. There's no other pullback. This is not a pullback, so there's no other pullback till there was a break. So you mark that pullback. Then the box where price, where the candle failed to give each other that handshake, that is where you're marking. And that place is, we had one here, we had maybe like two here, but we had to leave those two because the 50% Fibonacci 2 rule, I don't do anything below 50%. It's not even advisable in any way. If it is on 50%, you can still take a risk, have a tight stop loss. But when it's around that 618, 79, and 79%, that is a very, very lovely position. So look at it, look at where it happened. So let's go to the next example. So I would for the sake of time, I have marked a lot of those boxes. So you see those boxes, I'll just explain what happened, how it happened, and so let's go to it. So just to recap, this is what we've played on before. So I marked a lot of those boxes on a lot of those boxes. You have those boxes. So let's go back to this thing. Let's go back to our second example. With time, you get used to it. The lovely thing about this strategy is you are able to see where those changes happen, where the reversals could have happened. The previous one we did, the previous example, this is it. Remember, we had the box here. We had the box here, but we had to remove it because it wasn't necessary again. Look at it. That's the red to the red here. This red didn't touch this red, so there was a box here. We removed it because it wasn't necessary again. So, like what I said, my trend line strategy, you put a trend line from the top of that extension to the bottom. You from the top to the bottom of the extension or expansion, you start measuring with your trend line. You plot your trend line, you plot another one, you plot until you just. So you now look for the last pullback before the break of structure, the last pullback on the expansion phase before the break of structure, the last pullback. This is the last pullback. Last pullback. So the box, this is the box we have there. and that is exactly where price reversed. But price also did one thing. All the boxes, we had two boxes below this place. When price got there, price came all the way from, there was a close below the break of structure. Look at what price did. Price came to that box and sold off. But there was still no moment. The momentum price had was not enough to drive it deep down, so it came for that pullback. Pullback is when price is actually trying to gather enough strength, enough steam to enable it to move towards the intended direction. So price will always do a pullback after an expansion and extension. Price will pull back to gather some steam, like what these candles are doing now. Like why we have this box now. We said price, that is the red is supposed to come and give the other red a handshake. That is indirectly, that's a small pullback in a smaller time frame. Maybe a 1 minute time frame now. It is a pullback there. Okay, let's look at it for example. I don't want to deviate too much. If you put this trend line here, what does this mean? This black candle, that's a breakout. That's a breakout, and price pulled back to this. So every time you see a candle like here now, this candle, after this candle, this one did not touch it, this one came back there. This is more like a pullback to this place, a tiny pullback on a smaller time frame. So that is it. This is the bigger pullback, but these ones are the small macro, or even micro. Let me just call it micro pullbacks. That's what all the small ones are doing. So because I understand the logic behind these things, that is why I'm able to deduce that definitely if this is acting like this on a smaller time frame, there has to be some form of connection to it from the smaller time frame to the bigger time frame. And that is what we have. So look at it for this example now. This is the last box before the break of the structure. Price came there. That's more like a pullback there, but I couldn't. The strength, or let's say the strength it got there, the handshake it got was not satisfying to it. It still had some friends up that it had to say hello to and bid farewell. So it came back. And the thing is, once one price comes here and is not satisfied, it will make an attempt. If it's not able to, it will come back to the same box and maybe just bid them farewell and still check on its homies here. Price always check on his boys, check on his girls, check on his homies. This is the second box. Price tried to leave again. There was no much, the strength was not enough. He now went back to this box, and fortunately for price, this was where it kept the transport fare and the big jerry cans of fuel that he needed for his journey, or the ticket for its flight. So price came here, and what happened? Look at it. It crashed down, came back to take more diesel, more petrol, more cash, and look at it. And the funny thing on this movement too, the same thing. If you want to start plotting here, you see we'll be able to plot those boxes too, but it's not necessary since it's a pullback phase. This is the pullback phase. So for this, we can remove this. So you see it happened there. So the second strategy, the second example. So considering this is the pullback, this is the expansion or extension. Let me just call it expansion. I love that expansion. So from this phase, so for the second example, just like we said, look at from this, I've marked it already to save time. So from this candle to this, there was no touch. Not the entire candle, the last candle here. The last candle here, that is where the touch is necessary. This candle to this candle, or this, that is where we need a touch. So from this candle, now there was no touch to this. So we mark the body of this candle, just like the explanation I gave earlier. the body of that candle to the body of this one. You can use a box or you can use your trend line, but I prefer the box. Trend lines get scattered on the charts. It becomes difficult to spot which box is which. So, and another thing you can do to make it easy for you, you can maybe make this a blue colored box, a green colored box. You can change the colors of the boxes so it becomes very easy for you to spot. Not that you'll be somewhere you belong wondering, is this a box? Is this place a box? Is this place a box? So it depends on how visible it is, how convenient it is for you. So I've marked it already, and this is where the break of structure is. Our break of structure, this is where it is. Not necessary. So this is where our break of structure is. So if we use our trend line from the highest point to this place, this is the only pullback we have. This is not a pullback, because if you put your trend line here now, this is the highest buy candle to the lowest high. You see, there has to be a lower low here, and the lower low, this is a breakout candle. This is where the lower low ended. So if you place your candle, your trend line like this, it has gone down beyond the break of structure. So this is the only pullback we have. So now what I said earlier is that pullback spot, the box where that pullback is the box. That is the main box price is going to come back to. So let's since we have that point, so we can remove this box. And then another thing is, apart from this, let's still make use of our Fibonacci tool. The highest point to the lowest point. So from the highest point of the that face to the lowest point, and on normal grounds, let's pretend as if all this is not happening. The pullback has not started yet. So this is our 50% line. See, this is our 50% line. So once the price comes into this place, we are only interested in these two boxes. So this box is to be removed. We don't need the box, and we don't need the fibs again. So we know this is above the 50% retracement line. And so since we have this bonus, in some you will not have this. In some you will not have this. So you have to adopt some form of maybe there's a strategy I used again, a 5 minute high and low break. You can go and watch that video. It will be very useful for you in situations where you don't have a pullback before the break of structure. So my strategies are interwoven, connected one way or the other. All you have to do is just don't use everything. Just watch the videos, then sit back. What I did too when I was learning, I watched a lot of videos, a lot of tutorial videos. I read a lot of books. I downloaded a lot of tutorials, a lot of PDFs. Then I started coming up with, if I can use this part, that part of video A, this part of video C, that part of video F to form a strategy. And at the end of the day, I came up with different strategies. And today, to the glory of God, you guys are benefiting from some of those strategies I was able to come up with. Now in my head, I don't even know how many strategies are in my head. At times I get confused. I had some parts of the beginning to the other. So let's leave that. But the thing is, in some cases you won't have this. So when you don't have this, you might be lucky you just have one box. But if you don't have one box, you take a shot at the first box with a tight stop loss. So if the thing about forex is, if your strategy is good, even if you have a loss here, this profit will cover it. It will pay you back. Assuming you have a loss of maybe like $5-10 here. When you now make this, when this one becomes profitable, if this one is a success, it will definitely give you the loss. It will pay you back for the loss. That is the fun thing about forex trading. It's only when you start having consecutive losses, you don't know what you are doing, you're just losing, but that is when you run into problems. But if you know what you are doing, you have a very good strategy like this one. If you have a loss, you have 2 losses, 3 losses. If you are successful in just one, it will pay you back for the losses you sustained. So back to this. So luckily for us, we have this, so we can as well remove this box. And let's say price was just here. So let's look at where price came back to. Let's look at, is this not crazy? Look at it. That same spot. Now it now depends on you. I've shown you the logic behind it. It now depends on you to create your own form of entry. Some people deal with entry confirmations before they enter a trade. Some people have different strategies they use to enter their trade. I have different strategies. Most of my strategies are lower time frame strategies. Like we are on a 1 hour chart now. If I want to enter this trade, once the price gets to the box, I'll dive down to either a 5-minute chart or a 1-minute chart. That is when I'll now use that strategy, entry strategies, lower time frame entry strategies. I'll now use one of my strategies to enter this market and enter for itself. And at times, some people just seek certain type of confirmations like this. Now this is one of my strategies too, but I don't use it except I'm inside that specific box, and I'm sure that box is where I want. I always look for a break of the highest candle. That is the buy candle. I look for that. That's the one candle. Once there's a break and a lower low forms below it, once there's a retest of that same candle, please let's look at it. The break of this, that's a lower low formed under that single candle. Lower low, a retest and sell. I won't do it any other place. This strategy is not that reliable on other spots. But when you are inside the box and you are sure of that box, like I'm very sure of this box because it contains 2 things I regularly look for. This is one of my most prized possessions. This strategy, I love it so much because it is very reliable when the 2 things jam. If it is inside the 50% Fibonacci retracement level, well inside, that is like maybe around the 618 or the 79%, and it is the last pullback before the break of structure, it is very reliable most times. I won't say all the time. Nothing is 100% in forex. I always say that, but most times it is reliable. So if I have something like this, once I have my price come in there, I'll just look for the break of the highest price. That is the highest candle. A break of that candle. That is anytime I tell you a break of something, please bear in mind that I'm always referring to a lower low form. A lower low forms under that thing or above that thing. So once I have a break of the highest buy candle, a lower low forms, and the retest or the pullback to that same candle, I'm entering itself. But some people would rather go to, like me too, I do it most of the time. I do it often. I'll dive down to a 5-minute chart or even a 1-minute chart and look for something like a particular type of entry strategy. Then I'll enter myself. And look at what happened. Look at it. From that same box, look at it. And being on it happens in every time frame, but I prefer 1 hour, 30 minutes, 15 minutes. 5 minutes is noisy. It's very good for 5 minutes too, but it's noisy. There are times I don't really like 5 minutes. I like 15, 30 minutes, then 1 hour. 4 hours takes too much time. I don't want to grow gray hair waiting for a trade. So please don't hesitate to because it is in your own best interest to plot out where those possible areas where price can reverse. So now, since you have a close and a higher high from above the change of character line towards the other side, it is a break of structure. So once you have it, come back, start plotting where those candles did not meet, they did not shake. For this now, I told you, if you are looking for a buy, you check for the sell candles where the sell candles did not touch each other. If you are looking for a sell, you check for where the buy candles didn't touch each other. So for this now, we are looking for a buy, so we are checking for where the black candles didn't touch each other. So basically, to avoid too much stress trying to plot, just for starters, just look for the highest, that's the last pullback before the break of this line. That is what I already did here to save time. So all this where price, the black did not touch the black, like black did not touch black here, there was space here, there was space between the two candles here. So I plotted, look, I mapped out my trend line, my lower time frame trend line. I use it at times for this too. I plot it out to try and figure out which one of these pullbacks is the last pullback before the break of this. And fortunately enough for me, this is the last pullback before the break of this structure. So I can as well remove all this. I left it there for the sake of you guys, so that you understand what I'm saying. So this is the last pullback. So let's pretend all this has not happened. I'm trying to use a mobile phone. I told you guys the reason why. For those of you who are just watching this for the first time, I'm using a mobile phone to teach you guys, because I believe some of us are still hustling to start forex trading. So we don't have to start looking at it like, without a laptop I can't do it, without a big screen I can't do it. You can use your mobile phone. I'm on a mobile phone, an Android mobile phone. I simply just bought a Bluetooth mouse. So it's a Bluetooth mouse I'm using with the mobile phone to do all this training. I have a laptop, I have a big screen, I have other gadgets I use to trade. But I intentionally focused on beginners, that's new traders. I'm trying to figure out a way to help you guys to blend in. So the minute you start making money, you can upgrade, buy your expensive laptops, your expensive big screens, your touch screens, whatever it is you feel like using. But for now, you still have a mobile phone. So let's toy with it, let's work with it. So back to what we're saying. So this is our last pullback before the break of this structure. So we just place so from here to here. Let's pretend this is where price is presently. Price has not gotten here. So from here to here, you start mapping out where your candles failed to touch each other. So now this example is one example I like, because I'm going to be able to explain certain things to you. In some instances like this, you will just have red candles. There won't be black, too much black there. Since you are trying to figure out where the space is between two black candles that fail to touch each other, you are going to have problems if this is the last black and this is the last. Look at how big it is. This to here, that's the space between the last black and the next one. So you can't put a big box like this, it's going to be difficult. So what you do is you dive down a step below your present chart. I'm on a 1 hour chart, so if you want to do it, you put this there. Then you go to a lower time frame, a step lower. You see, that is why I'm able to figure it out that, okay, there's a black candle here, there's a black one here that refuse to touch each other. That's why I have my box there. And the next one is from here to here. Can you see it? from this candle now to this place, there is no touch between the two blacks there. That is why the box is there. From here to here, there is no touch between the two black candles. That is why I have my box there. And remember, if you are mapping out your box, make sure the box touches the body of the two candles, not just the wick. The bodies of the two candles. The two candles that fail to touch the two black. So let's go back to, since we have it, if you don't have it on the 30 minutes chart, you know we are on 1 hour, I went down 30 minutes. If you don't have it, if you don't have what you're looking for on 30 minutes, you go to 15 minutes and you map your boxes there. Then you come back to your 1 hour to see how it fits in. So let's go back to the 1 hour chart. You see now where let's remove this. We don't need it anymore. Look at it now. We're able to accurately get where the boxes are. But assuming we stayed put here, we won't be able to figure out where the boxes are. We'll be looking at it like this is where the box starts, this is where it ends. That's too big. So please remember that. So now we have our last pullback before this. So now if we want to look at it, do we really need Fibonacci? Not really. We have the box. Fibonacci comes in when you don't have box, or you also need to just try and figure it out through other methods. But since we have the box, I don't need Fibonacci. Or I can as well still, let's leave it out. Let's leave it out. It's not necessary since we have the last pullback before the break of this our break of structure. So since the pullback is this big, we have two of this then. So now this is where the problem is. We don't know which one out of the two will be the lucky one. But most times our advice, you use the last one. That is the lowest one, not the first one. So let's leave out. If at the end of the day price moves with the first one, so be it. You didn't lose anything. There will be other trades. Better than you using this and you have a loss and use this. But it depends. If your stop loss is small enough, you can risk it. It's just 2 trades. Risk this one. If it doesn't work, this one will work and it will give you back your money. That's what I used to tell people. At times you say, I don't want to lose the first one. And if you lose the first one, the second one, if it is successful, it will give you back the money you lost here. As long as you trade, you are not trading stupidly. Because if you now trade, you now put all you use a big lot to trade and you now lose. What is the point? What are you rushing for? Why not just use a simple lot? Maybe 0.2, maybe 0.1 for very minimal small trade lots. Over time, as you improve, as you gather profits, you can gradually increase your lots. So you can put, depending on your entry conditions, entry rules. If this box, if your entry rules are satisfied, once you come into this box, you can place a trade, and if it fails to go, you lose that trade. But when you get here and your trade becomes successful, to give you the money you lost here. Then another thing is for reasons best known to me, most times I avoid this. I go with the second one. As long as we are inside this box. If I have 3 of these inside this box, I will still go for the last one. That is the way I did. So now let's look at it. This is the last box inside this. Price came here. Price did whatever it is it normally does. And for the way I said, at times if I'm not in the mood to start going down lower time frames and all those kind of things, I'll just pick the last candle, which is this. Once I have a higher high above it, as a candle close above it, higher high, and return back to it, I enter my trade. That is me at times. That's the way I do my thing at times. I don't have time for all those, because I'm very certain of this will work. Look at it. Let me change the color so you see. I guess that's the second or the third example. It should be the second. Is it the third? It should be the third example. Let's use red so we'll spot it easily. This is a very, very lovely strategy for my lazy people. The last candle, you put your box there. Once you have a higher, it has to be inside the box. There has to be a touch. Please don't forget that if you must, it is an entry strategy, but I advise you, your stop loss might be big a bit, but most times I advise people to dive down. This is a 1 hour chart. So if you as a beginner, or if you are someone with a very small portfolio, maybe your total capital, your trading capital is not that much, I don't advise you trade from a 1 hour chart. I advise you to go down as low down as 5 minutes, as 1 minute, to go and look for an entry. Don't worry, over time I'll create a video. I'll compile a video of 5 lower time frame trade entry strategies. Very simple ones. You can close your eyes and even place it. So for people who have capitals, enough capitals, you can use this. So once your candle touches the box, you just look for the lowest candle, the lowest sell candle, a break above it, that is a high above that candle, a retest to that candle, and look at it. Price went up. Price went up. Price went up. So please comment, like, subscribe to my channel, hit the notification bell so that you get notified once I come up with strategies, very lovely strategies like this. So for now, I would say bye.